How does business interest play a role in the lives of corporations? Well, most interest paid or accrued during the taxable year on indebtedness incurred for business purposes is deductible, although limitations may apply. Let me just take a pause here and let's talk about the differences with interest. This also, I'm going to talk about individuals because this applies here as well. With interest, if I use a credit card and pay interest on that credit card to buy a car or, I don't know, a TV or something, that's not deductible at all. Now, yes, that in the past could have been deductible, but that's an itemized and not going to get into the past. However, as an individual, if I borrow money to buy stocks, that's investment interest, and I can deduct that from my personal tax return. Similarly, here, we're talking about indebtedness for business purposes. So if the company is using this debt to buy more machines to increase their productivity, that is what we're talking about here. Not if they take out a lot of debt to fund a bunch of executives' vacations to an exotic island. The reason here being the IRS wants to incentivize investment in capital, investment in business and industry, all that. That's why we're talking about what we are. That's the purpose. That's the context. I always like to talk about the context, makes it a little more real. The business interest expense deduction is limited to the sum of either the business interest income, 30% of adjusted taxable income, and floor plan financing interest expense. There's some of these terms, I just have to pause and say them a little bit slower. ATI is taxable business income for the year, excluding all interest income and interest expense. Floor plan financing is debt that's typically used to acquire motor vehicles held for sale or lease where the debt is secured by the acquired inventory. I'm going to be honest, the floor plan financing, this is not something that's too common. I wouldn't worry about it too much. Disallowed business interest expense can be carried forward indefinitely. So yes, the IRS wants to incentivize you to allow you to deduct business interest expense. However, there are certain limitations to that, just as there are limitations to everything. That's why we're seeing what we are here. The limitation does not apply if the taxpayer's average annual gross receipts are under an annual threshold, which we'll include in the resources because that does change for the prior 3 taxable years. This amount was originally established at $25 million as a result of the Tax Cuts and Jobs Act of 2017 and is increased annually for inflation. Prepaid interest expense must be allocated to the proper period to which it's related, and interest expense on debt incurred to purchase tax-free bonds is not deductible. So just different exceptions to the deductibility of that interest. So we see here, again, just if you use that interest to buy tax-free bonds, the IRS doesn't want to give you a double benefit. All right, we're going to see an example here. Suppose a business has the following financial data for the taxable year. We've got interest income, interest expense, adjusted taxable income, which excludes the interest income and expense, the floor plan financing interest expense, the current year disallowed limitation, which is 27. Again, this is the one that's subject to change. We're just giving it to you here. And then the average annual gross receipts for the prior 3 taxable years is 25 million. Now, since the business's average annual gross receipts for the prior 3 years are 25 million, which is less than the 27 million threshold, the business interest expense limitation does not apply. This is to help smaller businesses because if you've got average annual gross receipts of less than 25 million, or less than the threshold, in this case is 27 million, basically you're not the largest fish in the sea. There are a lot of larger companies and there are going to be extra limitations for those. Therefore, we can deduct the full 60,000 of interest expense. But as we like to see, what happens if that's not the case? Obviously, we don't want to just end it there and not discuss the rest of our rules. However, let's just say they were above the 27 million threshold, the limitation would apply. Doesn't matter if it's 29, if it's 30 million, whatever. If they're above that set 27 threshold in this example, this applies. In this case, the maximum deductible business interest expense will be calculated as the following. We've got business interest income of 10,000. Then we take our number 2, which is 30% of the ATI. So the ATI here is 100,000. 30% of 100,000, $30,000. And then the floor plan financing interest expense would just be given, it's 5,000. So here the sum of these is $45,000. Now in this scenario, the business would be allowed to deduct $45,000 of its $60,000 interest expense, with the remaining $15,000 disallowed business interest expense carried forward indefinitely to future years. Yeah, not the most critical type of question you may see, but here it is for you to prepare. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of cpa.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.